Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
Well, we're still sort of in the chop time after the major uplift, November 2024. I think the third best November, only the third best in Bitcoin history. It was up 40%. Now it looks like Bitcoin's taking a little bit of a breather. You've seen some alts, like, it's a little bit of rotation internal to crypto. But what's your sense on where we are right now?
I think folks are reaching along the risk curve at the moment, and that is largely why alts have outperformed recently. And so Ripple was a big outperformer over the last couple of weeks, going from 50 cents all the way up to almost $3. So that was an insane move. We've had other alts that are large caps trade incredibly well. DeFi is trading super well. Aave, I think got up to 250, Compound, etc. And so I think folks have done really well this year in crypto and are now more comfortable with the downside risks in crypto. And so they're just reaching out the risk curve. And I think that's best demonstrated in ETH BTC, which is now testing 0.04.
Yep.
Which is a big level. And I think that's something that's a trend that could continue.
Mm-hmm.
And from a risk reward perspective, ETH BTC has gotten crushed over the past year. And so it offers, really good risk reward, and it doesn't take much to move ETH. Like there's no, like if somebody tried to buy $1 billion worth of ETH, it's going to go up a reasonable amount. And so what we're having now is just folks going out the risk curve with memes, DeFi tokens, and alts. I think that's a trend that's likely going to continue for a short while.
Mm-hmm.
That's kind of...
I think that's right. I think our viewers will know, and my audience will know that I've been a very vocal ETH BTC short for years. I did tweet, however, on November 9th that the reversal may be about to happen. I didn't clip the bottom exactly. It went slightly lower from where I said, but it has started to meaningfully move higher. I'm not prepared necessarily to say that we're really confirmed out of this trend, this multi-year downtrend, but it does feel like there are reasons why Ethereum and altcoins could perform well relative to Bitcoin, because of the regulatory stuff is mostly good for them more than Bitcoin.
I just come back to the flows and the positioning. Right, folks want to allocate to this space right now, and folks see the return profiles of some of these alts recently, et cetera, and are like, oh, I want to diversify my crypto exposure, right? And so when you've got capital coming in and folks are generally underweight these alts, ETH in particular, it's going to cause, a pretty meaningful reaction.
Yeah.
So
and they have ETH ETFs, so you can easily imagine.
As well. And, I think there's so many things in terms of the regulatory stuff that will come and help ETH as a product. So options on ETH ETFs, staking, right? Eventually in-kind create redemption
That'd
into...
be huge for both, by
for
the way.
both.
Yeah.
And so, I think that's super, notable. The other thing is just, ETH doesn't necessarily have the same supply dynamics as Bitcoin. If you guys remember throughout this year, we've had to absorb, GOX selling, we had to absorb government selling, Chinese, German, probably some US. And so, the GBTC unlock, et cetera. And so the market had to absorb a ton of supply. With ETH, you really only have had to absorb the ETH kind of outflows from that grayscale product. Right. But outside of that,
minimal government holdings. I mean, there's
minimal.
There are some, but it's
And it's like, okay, you want to own crypto and you're really large. There's only like a couple places to put it. And so, it's Bitcoin and it's ETH.
Yeah.
And ETH has dramatically underperformed over the past year or so. And so I think the story is pretty simple.
Yeah.
I also do think that the 100K level is super significant
for Bitcoin
in terms of like when you see that breakthrough, I think it'll be explosive once it happens. I don't think it's like, oh, you go from, you might go to like up to 101,000 or something like that. But realistically, I think the move will be violent. You'll probably be 105 to 110 when you actually do break it. And what do alts do in that environment? All right. If anybody's actually genuinely thinking, oh, Bitcoin's going to break through 100, it'd be kind of silly not to have some exposure to other higher beta assets. And so I think that's, partially why, you're getting some of this outperformance is we all think Bitcoin's going to go higher.
So positioning for that higher beta outcome as the space uplifts overall. Yeah.
Right. And, you go back to the classic construct where, to move an alt token 5%, it requires much, much less capital than it does to move Bitcoin up 5%. And so if you do, like, those marginal inflows into the alt complex are a lot more meaningful from a subsequent price return standpoint. And so, like, that's the part of the, the market cycle you're in. And, it likely continues for a little bit.
I think that's right. I think on the macro side, there was some jobs data I saw, like some downward revision. It's not the best, right? But and then
so it's been a bit mixed, right? So you had the JOLTS figure released yesterday, which showed a very dramatic increase in job openings. To the magnitude was not seen since like November of 2023.
So that's healthy. That says
healthy.
The economy wants to grow.
Correct.
Yeah.
You don't put job openings up unless you're intending to hire.
Yeah.
Now, we had ISM services this morning. And ISM services is really important because, services comprise, call it 70% of the U.S. economy, right? So that's really the engine of the U.S. And basically, it came in much softer than expected. It came in around 52 versus expectations of 54. Anything above 50 is expansionary. Below is contractionary. And, the fact that it came in soft was, a sign that things are cooling a little bit. The employment section as well in ISM services came in a bit softer than expected as well, while the prices paid component was elevated. And so what that data print essentially shows you or suggests is that, the U.S. might be in a period of stagflation, or might be moving closer to a stagflationary period.
Stagflation-ish, almost, right? It was a slight weakening in the
growth
figures with a slight increase
in
perhaps
prices.
in prices, right?
Right.
So, yeah.
And so it really says stagflation.
Yeah. So be cautious.
Be
that.
cautious. But I do think that, the economy's still fine.
Yeah.
And no matter what you think about Doge and, all the promises made during the election, one thing I know for sure is that politicians are really good at spending money, and they're allergic to not spending it. And so I think the fiscal side of the U.S. is going to be fine for next year. The other thing I'd like to highlight on the macro front is just I think there's a really strong technical picture in U.S. equities for the balance of the year. Strong seasonals. Tech stock buybacks, which, at points in time are like, maybe like $4 to $5 billion a day at their peak. So that's a lot of just natural buy pressure that's in equities. And so even today on a soft ISM number, like, stocks are continuing to make highs. And I think that's just a function of just flows. But again, the S&P is really driven by 5 to 7 names on any given year. And those companies are still doing great. And so I think for the rest of the year, you're probably still going to have a pretty strong equity market. Now, where I do
Santa Claus rally.
Correct. Now, where I do turn more cautious, though, is in January, in the new year. And I think that folks need to be reminded about how slow government is. And I think there's a lot of expectations about the Trump administration, and folks will realize that even though it's his second term and he should be more efficient, et cetera, like, the wheels of government are like stone wheels. They move slowly.
They do.
And so I think
I've said this a lot. I mean, Chair Gary Gensler wasn't confirmed by the Senate until April of 2021, right? So, and that's, the SEC chair, but Even the major cabinet officials, the Secretary of Treasury will probably be among the first to be confirmed, along with like the Secretary of Defense or these very critical cabinet roles, but still could take a while, and certainly then takes them time to like get their feet wet, right? To get the
Yeah,
stuff going, and certainly to get policy. Why they always talk about the first 100 days. Well, that takes 100 days. That's more than 3 months, right?
correct.
So you're not expecting a ton of action early.
Right. And so I think that's kind of your catalyst for stuff to moderate a little bit.
Right, the actual policy is actually starting,
Hmm.
but that will take
And
a
it's
little bit.
also like the guy is crazy, put simply. I mean, that's not to say he's not crazy in a good way or crazy in a bad way. It's just that his idea of like what a reasonable response is outside the normal one standard deviation band for what regular government officials, right? Proposing 100% tariffs and all this stuff and governing via social media, etc. And so you're gonna have a lot of volatility as a function of just how policy is done. And some of the policies he's proposing, like I don't necessarily think the market should react well to them, right? Um, Take this China back and forth, right? During his last administration, the concerns about a trade war with China got so aggressive that the stock market rolled and the Fed started cutting, and so now, like, what were you reading about today? Like, China already started, canceling, I think, germanium or one of these rare earth metals. They're like going to stop exporting to the U.S. And so, like, the idea of trade conflict and geopolitical stuff, I think, will become much more apparent once he's in office. And I don't necessarily know if that's going to be good for risk.
All right, well, it's going to be interesting anyway. That's it. Let's leave it there. Beimnet Abebe from Galaxy Trading, my friend. Thank you so much.